Good evening. This is the video newsletter for buysellshort.com for Tuesday, August 5th. Fed day today. Fed came. No real surprise with the Fed decision. Rates left unchanged. Talked positive about the economy. Issued their worries about inflation that they expect to moderate at the end of the year. Just same old, same old. Stock market was rallying into the Fed meeting and just extended the rally afterwards. Volume was pretty low and has been pretty low recently. Anyway, here we have the Dow 15-minute chart. As I mentioned on Sunday, we've been back and forth in many channels, but as you can see on the red lines, we're still within this bearish rising wedge on the 15-minute chart. And actually, if you follow the cursor here, we're actually forming a W in this time frame. And as you can see, up, down, and this leg here usually goes above the last one. It's typically a bullish formation. So if we flip to the daily chart, essentially what it's telling us is we're going at least to the 50-day moving average, if not higher near term. As you can see here, we are in this bearish rising wedge, but odds are pretty good we're going to see a test of 12,000. Doesn't matter what the news is going to be, we're probably going to that level as long as we hold 11,200 on the daily. RSI looks pretty good. We're ready to break the recent resistance. Stochastics have been able to hold above 50, and on-balance volume has held pretty well as well. Volume was lacking today, but it's been lacking over the last couple of days. So what we'd really like to see, if we do see extension, is higher volume. But then again, it is August. We're at the end of the summer doldrums, so volume may not be here. Looking out a little further, what I'm actually thinking we're probably going to see, what we usually see every year, is an August rally and then the typical September, October seasonal lows. That actually might be where the crap hits the fan on the financials and we finally get over that. Anyway, big helper today was oil. Oil price down again. We broke below the shoulder. So next target on oil would be the 200-day moving average. That is at 109. Everyone is running for the hills on oil. About damn time. So still hasn't pushed its way through to the pump. Gas price is still pretty high, but gas stations are going to lose any excuse they have for keeping them high with the sell-offs we've been having recently in oil. Quick mention here on Capstone CPST. Nice winner for us over the last month. As I mentioned, even if you didn't play this on a short, it was a picture perfect head and shoulders formation, and you can see the breakdown, and it got to our upper target level, which was 260 today actually. So that's $1.28 gain in 3 weeks. Can't argue with that at all. SMH, we got our close above the 20-day exponential today. So next target on the SMH is a move to the 50-day moving average and the upper trend line at 30. So still has some legs. The way the market's being acting right now and the setup and the semiconductors, if there is a retrace, your add spot would be the 8-day moving average. So 2780 is where we'd be looking to pick up scalp shares on a dip with stops at 2750 and target 30. And keep in mind, getting back to 30 just gets us to the upper level of this bullish falling wedge. Once it breaks out, we're going back to 33 by the end of the year at least. RSI is about to break 50. Stochastics are in a nice uptrend. On-balance volume is also in a nice uptrend as well. So this is what we want to see now. We want to see the stocks, our tech stocks, start to take off as commodities get hammered. Side note, we had Cisco in after hours today, beat, and the stock was up nicely in after hours. So we should see some follow through on tech stocks tomorrow, especially in the laggard stocks. It may not show up in the the index gains, but there should be some movers tomorrow. So we're going to keep our eyes peeled for these. Stock plays, LSCC stock's been just decimated in the month of July, all the way from 4 down to 225 on its earnings report. We have what looks to be a hammer slash spinning top bottom on the candlestick today. and target on the snapback, as mentioned in the trading alert, would be 250 plus. 20-day exponential is all the way up there at 261. RSI is in the basement. MACD has not really tanked considering the selling volume we've had. So that also indicates a possible near-term bottom, and stochastics are also in the basement here as well. So stops 225, 7 cents below, 10 to 15% upside. So pretty good risk reward trade here, especially with earnings out of the way on this one. Sirius, been hammered since the merger. Everyone and mom has come out and said sell the stock. Even Monkey Boy Kramer came out and said sell the stock the day of the merger after pumping it for a year. Yesterday, CEO came out and bought 2 million shares of Sirius with his own money. So good sign right there. This guy's insider buying hasn't been great, but that was before the merger got announced. So he's putting his money where his mouth is. This is still a 20-day exponential moving average snapback play. 20-day is at 189 now. So low 140s, probably a good place to average down and do another nibble here, as I mentioned in the chat room today. RSI, we're at 30, so we're in the basement. Stochastics, we're also in the basement. We saw a nice snapback and on-balance volume today. And real quickly, every time stochastics have gone below 20, we've seen a substantial rally in the stock. So this last time here, we got $1, almost $1 rally. Back here, we got 50-cent rally. This time, all we're looking for is 40 to 50 cents on the bounce back here. IMMU, old scalper favorite of ours, pretty sharp sell-off in the month of July. Looks to have bottomed here. Stops would be 217. Target would be a move back to the 20-day exponential. So we're looking for a move to 234 to 239 near term, meaning in the next couple of days. Stochastics oversold, and yet again, this is a great stock for its stochastic indicator. Last two times we've dipped below 20 here, we've seen a 60 to 70 cents pop. Back in early July, we went from 207 to 285. Back in mid-May, we went from 225 to 288. So how about this time we go from 220 to 265? How's that sound? We're only looking for 10 to 15 cents on the scalp, but some more on the upside would be nice. Real quick mention here on Yahoo. Stocks just poor management, merger, blah, blah, blah. Been hammered down. Possible bottom in place here, especially if the tech stocks go. If I was entering this one, I would probably enter a break over the 8-day moving average. So that's 2004, and stops would be at 1959. Target would be a move to at least 21, but if this one gets motoring, there's no reason why it shouldn't see a 10 to 15% gain. RSI is bouncing off 30. Stochastics also under 20, which is where we want to see these laggard stocks when we grab them. So a large cap play to keep in mind as the large caps get jacked up right now. Not very many other plays. Huge rally today. Do not like to throw out a lot of buy recommendations, especially with market up 300 points. Let's see what happens tomorrow and see which stocks are lagging and showing strength. So that is it for the video tonight. I'll see you guys in the chat room tomorrow. Good night.